G'day folks, Jim here from Forex. It is Thursday the 25th of June. Well, it's been a pretty damaging risk-off session on Wednesday as a new blowout in COVID cases in the US has seen downside pressure on risk assets resuming. And this has sent the US indices down by around 2.5% and oil by around 5%. The US dollar was a beneficiary on safe haven grounds, and we'll take a look at that in a second. But I'll start out looking at the trend table, where, as we can see here, it's pretty much a sea of red across the board. The US dollar, as I say, is a beneficiary of this new safe haven demand. That sent the euro lower. The Aussie and the Kiwi both look heavy as well. The other currencies are more choppy. Dollar yen's actually performed reasonably well, I think, in all this. I might have expected to see the yen show more strength, but it's dollar yen's back above 107 at the moment. It looks to me as though we do have further downside pressure to come ahead for the euro, the Aussie and the Kiwi. And as you can see, the dollar index is also turned higher, so that kind of adds weight to the whole thing. As far as the stock markets go, I tend to watch the S&P and the ASX, and they both look pretty heavy today. And I think we're probably going to test the downside. Gold made a new 8-year high at 1780, I think it was, but that's since turned lower to finish on the on session lows. But it looks, the dailies still look vaguely positive, so I suspect some choppy trade. Same applies to silver, really. Oil has turned quite sharply lower from its highs. We'll have a look at the charts there. It did get up to the resistance level I've been speaking about previously, that 40 to 43 area. It got up to 41.60, I think it was, but it's closed at 38, so that's quite a sharp turn lower. The crosses probably best left alone at the moment. There's nothing really stands out to me, although sterling Aussie may be trying to form a bit of a base. It's had a decent downtrend, maybe trying to form a base. We'll have a look at that in a second. So without any further ado, we'll go along and have a look at the charts. Okay, here we go. We've got a 4-hour chart of the S&P here, and it's just been very, very choppy recently. And as I said previously, I think we're currently within a trading range between this high here, 31.65 or so, up this high here, and 3,000, which is on the downside. And I suspect that's going to continue to be the case, although I do think we're now having squeezed to the top side, not what to be 31.45 or so. I think we're now probably in for a test of 3,000, and maybe another look at this low here at some stage, but that's still 100 points away. The dailies, the 4-hourly charts do look a little negative. The hourlies are also lower, but they're showing some higher lows here. So the hourlies might be basing out for a while, but I think I'd probably still be selling into strength. The dailies do look a bit heavy, and we've got that 31.65 level up here. The 200-day moving average comes in here, sort of 30.20. And below that, we've got down at 29.80, 29.75 or so. We've got the this FIBO support ahead of that low down there, 20.37, and the 100-day moving average. That's a long way off at the moment. But I suspect, given the outlook for the dailies, we're probably going to push a little bit lower over the next few sessions. But in the longer term, the weeklies still look all right to me. It's all obviously very dependent on how the pandemic progresses, but the weekly charts still look okay, and I kind of like buying dips in the S&P, but right now I'd be looking for levels sub 3,000, and in the meantime I think we're probably going to go down there. So shorter term, look to sell rallies, and then look for a bounce at some stage, probably not till next week. We've got the first quarter GDP figures out today, which are expected to show a drop, I think, of 5% quarter on quarter. So that's pretty much written in, but the direction will come after that in the States today, depending on what those numbers are. There's plenty of else out as well. I think the PCE indicators are out, personal consumption and expenditure. There's a couple of Fed speakers as well. And of course, we've also got the weekly jobless claims, which have been taking on increasing importance over the last couple of months. So that's the S&P. The ASX that I said that I watch as well, that looks pretty much the same. It is breaking down through this rising trend support here, but it's still underpinned by the 100-day moving average, which is down here just under 5,800. So and there's going to be some support down around that level. So while I look at the hourly charts, they do look a bit heavy, and I think we might see a test of 5,800. The 4 hourly charts are showing us much the same. This FIBO support, that comes in here, 57.70, and below that we've got this low here, 57.10, and down here 56.5. So I think that might be the direction that we're headed in over the next few sessions. But the weeklies, once again, they look all right. The 200-week moving average is going to prove substantial resistance, but if we can get through there at some stage, then we're heading back up to this sort of 6,200. Now that's a long way off at the moment. I don't think we're going anywhere close, but I think for the time being, look for more choppy trade, but with a near-term bias to the downside. While we're here, I'll take a look at oil. Okay, so here we have an hourly chart of West Texas Intermediate. Now, as you can see, we did get up. We tested that resistance that I pointed out in previous videos. It really didn't like it up there, so it's reacted quite violently, and we've seen a 6% drop to the downside. We're sitting on, I don't know if this was a head and shoulders or not really, but we're sitting right on, well, just below the neckline and below the 200-hour moving average. The hourly charts have become a little bit oversold, so a bit of a correction higher wouldn't really surprise me. But the longer term charts, the 4 hourly charts, beginning to point lower as well. So I think ultimately we can test with slightly lower levels. The session low was at 37.20, so that we can get down there quite easily, I think. And then below that, which should be decent support, we go down to 36.60, and then back even into this sideways area to around $35. Personally, I think we're now in a $35 to $40 trading range, and I'd be looking to just play that for the time being. The daily charts are beginning to look a little bit heavy though, so whether we have topped out here for the time being and need to come a bit lower, that may well be the case. The weeklies though still look positive to me, and I still hang on to the hope that we're going to break above sort of this 42 area, 43 area at some stage, but I really don't see that happening for a while to come. Onto the currencies. Okay, so here we have a hourly euro chart, and we're seeing right on the 100 and 200 hour moving averages, and I would expect for the next few hours that that's going to pretty much contain it. There's not an awful lot out for the time being, but the hourlies do point a bit lower, and the 4 hourlies are really doing nothing at all, but they may be showing some slight weakness as far as the euro is concerned. But if we do move down, we've got this rising trend support just here, sort of 112.25, below which I guess can head back to this sort of 111.70 low around here. That remains to be seen. If we see further safe haven demand for the dollar, then I guess that's going to give way here. But for the meantime, there's not very much momentum in the short-term charts. The dailies though look heavy, so I still prefer to sell into strength and to trade the euro from the short side. But as I say, the short-term indicators are not showing us an awful lot, and I wouldn't expect an awful lot out until the US session. But at that time, I think we could see further dollar strength. Dollar yen is kind of surprised me a little bit. I thought the yen might show further strength, but dollar yen's actually performed quite well here. So we broke this support line that I was talking about previously. We broke down through there. It looks like a complete false break. We've made pretty much a double bottom at this sort of level here and bounced back quite strongly. So we're back above 107. I'm not really sure. I think dollar yen's probably too high basket. The dailies are not showing us an awful lot, so I think it's going to end up being choppy. The way I would trade the yen, if anything, was I'd be looking to sell rallies in euro yen or Aussie yen, but for the time being, probably best left alone. Moving forward to the Aussie against the US dollar, that is. This is a 4-hour chart, and we're currently sitting right on support here at 68.60, where I think if that gives way, and I don't think we'll probably expect a great deal today, but once again, I kind of prefer the downside, not because of anything particular in the short term. The hourlies, as I say, are a bit heavy, but the dailies still look pretty heavy, so I prefer to sell into strength there. Having said that, if we were to take out that high of yesterday, sort of 69.60, where we kind of got a small double top here, I'd be or 69.70. I'd be out of any shorts then, because then I think we're going back to sort of 70.60. But for the time being, while stock markets look heavy, and I think they will continue to do so, I prefer the downside. Same applies to the Kiwi, which is sitting on support of its own right here, and a break of 64 takes us back to the possibility of trading down here to this sort of 63.20 level, which is where the 200-day moving average comes in as well, so 63.20, somewhere around there. So that's about that. We'll just have a quick look at the crosses, euro yen. Okay, so here we do have a 4-hour euro yen chart, and it's been pretty choppy, and the indicators, the 4-hour indicator is actually not telling us anything at all, so probably best left alone. But the dailies, what are they showing us? They're showing us a little bit to the downside, and maybe we do go and need to have a retest of the 200-day moving average, which is down 119.5, and possibly even to the 100-day moving average at 118.75. So yeah, I think I'd rather be short euro yen. I'd leave dollar yen alone, and I'll just go and have a quick look at some of the Ichimoku stuff. Okay, this is an Aussie chart, 4-hour Aussie chart, and it's the Aussie is closed below the cloud here, and we've opened up below it for beginning of Thursday trade. The base of the cloud comes in where sort of 68.80 or so, like that, and the top of the cloud is 69.20. I don't think we're going above there today. The dailies, well, we're opening up just below the daily Tenkan, sort of 68.70. So that might provide a bit of resistance, I think, and maybe we can head down to where's the Kijun's at 67.70. I don't think we're 67.80. I don't think we're going down there at least until the US session, but I think that might be the direction of it. I suspect the Euro Ichimokus look pretty much the same. Yeah, here we are. The Tenkan, we're just opening below the Tenkan on the dailies, and on the 4-hour charts. Once again, we're trying to break below the base of the cloud there, and the Kijun, which comes in sort of 112.60 or so. So we're very close. We're sitting close to that. So they're not telling us an awful lot. I do, as I said, I prefer the downside while we have this risk-off attitude, and another jump in coronavirus cases will keep the pressure on the downside as far as the euro is concerned, because people will be out there buying US dollars. Anyway, we'll leave it there for now. I'll come back tomorrow with another outlook, and until then, trade safely. Cheers, bye.